Hi consumer, it's Mrs. Ingersoll, and I am going to demo looking at stock charts on Yahoo Finance. The first thing you want to do is go to your web browser and open up Yahoo. You can Google Yahoo Finance, or you can go to Yahoo and then click on this link right here that says Finance. So we're going to go to that now. Now you have a couple options. You can just watch what I'm doing in the demo video and then go ahead and do it on your own. Or you can, let's say, have the video up side by side and click on Yahoo Finance and try and navigate Yahoo to feel more comfortable in it. So up here, you would search any company to find their stock chart. You can search by the name, or this is what's called a ticker symbol, that 3-letter symbol. That's the running symbol that you'll see when you're watching CNBC or you're watching Fox News, things like that, and there's ticker symbols running at the bottom of the screen. So we're going to search for Nike. And here is Nike's stock chart. So you can see.
Here's the chart.
Oh, and that's funny. My phone just popped up and somehow Siri heard me talking about Nike and the stock chart. And in class next time, I'll actually show you how you can use the Easy app in your phone to keep track of your stocks. So anyway, Nike is on the New York Stock Exchange, NYSE. That's just the stock exchange that it's traded on. Again, this is the ticker symbol right here, NKE. Okay, so that's what you'll see in the news. Up here, you can see the S&P 500 listed and the Dow Jones. These are they're called indexes, and this is a group of 500 stocks. You can actually Google to learn more about which of those 500 stocks is, but it's a sample of different stocks in different industries to kind of give you an indicator of how the stock market is doing. You can actually invest in the S&P 500 as a group, and so it kind of tells you, okay, is the stock market up or down? Looking at the Dow Jones, it's a group of 30 stocks. So again, feel free to Google that at a different time and see what's included in that. Right here, this big number is the current stock price, $55.47. The stock market is closed right now as I'm doing this at 10 o'clock at night. So if you were watching the stock chart during the day when the market is open, this number would be fluctuating, and as well as this one. So this is showing you that it went down 38 cents or 0.68% from the previous day's closing price. So let's look at a couple things. First, you have the stock charts right here. This is a 10-year I'm on. Typically, it starts on one day. So if I wanted to see what happened today, the stock price fell just a little bit from $55.85 down to $55.49. Then I'm going to click on the 1 year to give you an idea, and we can see again how much the low over the year has been. Oops, and that kind of brought me to a different stock chart here. And again, we can click over here and it says that the low was 49.72 at this point where I'm at. I'm going to go ahead and go back. Just want to look at the same stock chart I was at. I like looking at the 5-year stock chart too. I believe it gives you a nice picture of how much it's gone up. So you can see here, I'm hovering my cursor over here, but at that stock price, I wish I could actually point, but you see on the right in black, it says 22.84. So you can see June 2nd, 2012, the stock price was $22.84. If you bought low, which is the goal, buy your stocks at a low price and you sell it at a higher price, you are pretty much doubling your money over the course of those 5 years. That's the cool thing about stock market. Okay, look at all these numbers. These are really important. If you have not done so, you might want to turn in your binder to 3-9. All of this vocabulary is there with the definitions, so you can look back on that. Okay, so looking at the previous close, shows you how much the price was the day before. Coming down here to the day's range, so you can see here the high price was $56.21 over the day, and the lowest price that was traded was $55.47. If I ask you the question of how does the day's range vary, you would simply take the high price minus the low price, and that would show you the change, how much it changed over that day. I'm throwing a lot of stuff at you, so pause at any time and replay this back. The next thing is the 52-week range. So the 52-week range, again, is 1 year, 52 weeks. So here's the high price of the last year, and here's the lowest price of the last year. And to see what the difference is, you can see it's about $11 difference. Okay. The volume. This volume here is how many shares of stock were traded on this day. So today, 10 million shares, over close to 11 million shares were traded that day. This is also sales volume. Sales, it would be that kind of a question if you were asked that. And you'll see that on a worksheet you're going to be doing today. Market cap. Essentially, I put a link in the daily lesson plan as far as more information about the market cap, talking about how big the company is and how much it's generating, $91.5 billion. But really that means nothing unless you can compare that to its stock price to show really what's the value on that. So if you were to take $91 billion divided by 55.47, you would actually see the number of the dollars of shares that is actually not that stockholders haven't purchased yet. And so when you're comparing different companies together, you can actually do that analysis. Let's talk about the PE ratio. And again, this is in your notes on the worksheet on 3-9. So PE ratio, P stands for price, divided by earnings. You might want to write that down. So the price of the stock, which is $55, divided by the earnings of the company, I'd have to look it up, gives you this ratio. And so the lower the PE ratio, write this down, the lower the PE ratio when you're comparing different stocks in the same industry. A lower PE ratio tells you that it's a conservative stock, it's less risky. So 23 is actually a conservative PE ratio. That's a lower risk stock. When I first invested in Lululemon back years ago, the PE ratio was 75. And that is when the company didn't have strong earnings. They might not have even been profitable back then. I don't remember. They probably were if they had a PE ratio at all. And so 75 just meant that it was for the aggressive investor. It was more of a higher risk stock. We're almost done here. Let's look at the dividend yield. So again, we talked about the dividend, meaning if the company has earnings and they're a more established company, they're going to hand out to all their stockholders. This is the annual dividend, the annual. So if you owned one share of stock, you would get 0.72. You would get 72 cents for every share you owned. But let's say you owned 1,000 shares. You would multiply 72 cents times 1,000 shares, and that's how people like my mother-in-law is living on her dividends. Now, the yield is a percent that when you compare your investment of the stock price of $55.47 compared to, divided by, the dividend, for every share, I'm going to make 1.28%. So even without selling my stock for a capital gain, I am going to, just by owning this stock, I'm going to receive dividends, which equates to 1.28% return on an investment. That's way better than money sitting in my bank account. However, when inflation is at 3%, you can see that this isn't what's called an income stock. This isn't